Okay, good morning and welcome to Chaikin PowerFeed, your daily market digest. Today is Tuesday, June 26, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive Chaikin PowerFeed for free at www.chaikinanalytics.com/PowerFeed TV. So kind of be careful what you wish for comes to mind. You heard me last week say I wanted to see a pullback to test the 2741 level. Well, we tested it twice and then broke through it. So not exactly what I was hoping for, as U.S. equities were lower in Monday's trading, extending last week's pullback. Tech and energy were the biggest laggards. Utilities and consumer staples were the only sectors to finish higher. There's this defensive rotation going on, and we're going to actually look at the real estate group today. Treasuries were stronger across the curve. The dollar was weaker against the euro and the yen. Gold finished up 10 bips. And WTI crude oil settled down about 70 basis points, and that weighed on the energy stocks, which did start to do well. So now support comes into play at 27.10, and 27.41 becomes resistance. As we get to the desk this morning, futures are down about 30 basis points. Just kind of subdued relative to yesterday, but not really seeing the kind of bounce we would want to see after such an aggressive move lower yesterday. So we broke support at 27.41. Now support comes into play at 27.10 and then 26.58 to 26.75. Below that, we have the 200-day moving average at 26.64. Resistance now comes into play at 27.41. You can see that was the top of the range yesterday. We opened there and just faded away throughout the day. Kind of caught a bounce at the round number 2700 level. 27.10 support doing its job and holding for now. So one encouraging sign for the bulls, two actually. RSI didn't really get oversold. It's still above 40. That's still within bullish ranges as far as I'm concerned. And Chaikin money flow is still solidly positive. So despite the sell-off yesterday, the view remains the same. Consolidation within a secular uptrend might take a little bit more time just given the macro backdrop. However, I think once we get out of the news vacuum from a micro perspective, i.e. once we get to earnings season and we see the strong earnings prints, that could be the catalyst to move the market up and out. Right now, macro driving the market, trade tensions front mind. So that's driving the narrative for now. There's nothing we can do about that. So the S&P 500 breaks support at 27.41. The Dow actually closed below its 200-day moving average. A lot of people are going to make a big deal of this. I'm just kind of pointing it out because it's the first time it's happened in over 500 days. Defensive groups lead as risk-off sentiment takes hold. Today, we look at, is real estate bottoming on a relative basis? Futures point to a lower open. So every Tuesday, I run through a different sector and break it down to the industry level and see kind of what looks strong and what looks weak relative to the broader market within the sector. So today is real estate, and we're open to the possibility that there's a bottoming process taking place in real estate on a relative basis. But first, the Chaikin power bars for the major indices. The Dow 30, 3 bullish or very bullish stocks, 9 bearish or very bearish stocks. Interesting that did not change from the previous day, despite the 1.4% move lower. S&P 500 down a similar amount. So it did see some deterioration. Only 73 bullish or very bullish stocks for 95 bearish or very bearish stocks. Now, the NASDAQ was hardest hit. I mean, the selling is taking place in kind of the cyclical momentum names that had been leading the market. It seems like investors are selling winners and rotating into the defensive sectors, rotating into utilities, rotating into real estate, rotating into consumer staples. We'll see how long that lasts. We'll see if any of the changes in trend are taking place. Small caps did underperform, again, sticking with the theme of selling the winners. Bonds tick up 22 bips, yields back below 2.9%. And here are your utilities. And look at this. Utilities are now the number 2 sector from a power bar perspective, with 10 bullish or very bullish stocks and 4 bearish or very bearish stocks. We'll get to that later. So according to the Chaikin power bar, small cap stocks are more bullish than large cap stocks. Major indexes are mixed. And here's your choppy trade. We've been looking at it for a few weeks. Stock of the day. Every day as a Chaikin Analytics PowerFeed subscriber, we will generate a stock of the day for you based on the power gauge. Today's pick is the very bullish AEL, American Equity Investments, closed at 36.07 yesterday, down only 25 basis points, so did outperform on a relative basis. Stock has a very bullish power gauge rating due to very attractive financial metrics, very strong earnings performance, and very strong technicals. That's the price volume activity. We can see here that the stock, despite the insurance being the weakest group within financials, this stock has been predominantly bullish or neutral throughout the past 12 months. You can see we're on that very bullish rating now, strong trend, strong industry, leading the market. And tactically, we think this makes sense. The stock is currently oversold based on our overbought, oversold indicator. And money flow is, showing strong bullish intensity. So as the stock kind of moves sideways here above the rising long-term trend line, there's a compelling setup to be had to be long AEL. I think this is worth a look for investors who want exposure to strong names when they become oversold. This is the type of setup we're looking for. Ticker symbol AEL on the long side. I think it's worth a look. Our sector tracker, let's look at the movement of the major sectors over the last 5 days. And I mean, here's your defensive posture, right? Utilities up 3.8%, real estate up nearly 2.5%, staples up over 2%. This is risk-off mentality in the market right now. Industrials, technology, and materials, hardest hit by trade concerns. Materials and industrials, we understand. Technology now, as President Trump came out and said he would restrict Chinese investment in the U.S. technology space, that could have a big impact. That's something we want to keep an eye on. And especially for the bulls, with tech being such a large part of the S&P 500, we've gone over it a number of times. So, we'll see if these are new trends that are developing or if they're just counter trend moves. That's, but again, it's important. We don't want to be dogmatic in our view. If trends are changing, we want to be, we want to adapt and change with them. So our industry in focus today, fittingly, is the Dow Jones REIT Services Group. 32 bullish or very bullish stocks for only 6 bearish or very bearish stocks. And over the past 6 months, this group has actually underperformed. But that power bar ratio, which measures future potential, is very strong. It's currently ranked number 4 of 21 subsectors, and it's moved up 7 slots over the past week. So investors are coming to these defensive groups. Some of the indicative names: Ashford Hospitality, Diamond Rock Hospitality, and Xenia Hotels and Resorts, all with very bullish Chaikin power gauge ratings, all names that are worth a look if you want to kind of look for real estate exposure. If you take a more defensive stance, you want to buy the best names in every sector, and these three certainly stand out as the best names within this real estate services group. So we'll take a deeper dive on one of them today. Diamond Rock Hospitality, ticker DRH. Closed at 12.26 yesterday, down 65 basis points. It is a very bullish stock, a strong trend in a strong industry. Moving to the bottom of the chart now, we can see here's that power gauge rating has turned bullish or very bullish, and the stock is outperforming relative to the SPY. So our dynamic duo is in gear. The market is in agreement with our model, however you want to look at it. This is the type of name that we look at on the long side. And from a tactical standpoint, I'd say there's a compelling entry right here above the $12 level, with the stock, rounding out of deeply oversold conditions above the rising long-term trend line. Want to see a pickup in money flow here. You've seen money flow kind of tail off as the stock has come in, but still solidly positive since March. So something we'll keep an eye on, but this is a compelling name. Look, if you're looking for exposure to real estate, which could be making the turn on a relative basis, and we're going to look at that in a moment, you want to look for the strongest names in the group, and DRH is one of them. We have another name, my stock of the day today, which we'll get into later, also within the real estate group. You want to look for the strong names in the sectors as they're potentially beginning new trends on both an absolute and relative basis. So DRH, compelling on the long side. Yesterday's S&P 500 movers, what's kind of interesting to me here is, on a day where the market is down, nearly 2%, you want to kind of look for the names that held up the best, neutral stocks that were up, kind of figure out why, or a bullish stock that was up in a down tape. relative performance in the down tapes, the names that hold up well when the market is down overall, those are your potential leaders as the market emerges and the secular uptrend resumes. So look at a name like SCG, or Campbell Soup is potentially in play. That's a bit of a special situation, but an SCG, probably makes sense to dive in there and see what's going on. Your losers, the momentum names are getting clipped, right? Micron down 7%, nearly 7%. Netflix down 6.5%. IPG Photonics. These are momentum names within technology that had been leading, and that's where money is rotating out of as they rotate into some of these defensive sectors. Harley Davidson, a very bearish stock, down nearly 6% yesterday, as they highlighted that they are in fact being impacted by the potential trade tensions, actually talking about moving some of their production facilities over to Europe. So as we said, the Dow closes below the 200-day moving average. It's the first time in over 500 days that has happened. Now, I don't pay a ton of attention to the Dow other than now, because these are the names that are most likely to be impacted by potential trade wars. What concerns me the most here is not the break of the 200-day moving average, because the 200-day moving average is still upward sloping. What concerns me the most is this potential shift in the RSI to bearish ranges. However, money flow remains positive. It's kind of a mixed bag. They're 30 stocks, the ones that are exposed to trade tensions you want to avoid, but not really focusing a ton of my attention there. I just think it's interesting that you have to go back over 500 trading days to see the last time this index closed below its 200-day moving average. So as we said, is there a possible bottom in real estate on a relative basis? This chart is the XLRE, the real estate sector ETF, relative to the SPY, so relative to the broader market. And we are, in fact, open to the idea of a possible bottom on a relative basis. And part of the reason for that is this big positive divergence that we saw between price of the ratio and momentum back earlier this year in the February-March timeframe. You can see that as the price was making a new low in March, momentum was making higher lows. That's a strong positive divergence. We've subsequently, gone higher, and interestingly, the ratio has not become oversold since that time frame. We've now gapped through the 200-day moving average. The 50-day moving average is starting to move higher, and Chaikin money flow is solidly positive for real estate as a group. So I am open to the idea that there is a bottoming process taking place. Do I think we're out of the woods just yet? No, but I do think you can start to look for the best stocks in this group, kind of what we looked at earlier, right? You want to look for a name like Diamond Rock Hospitality for exposure to the real estate sector. Or this one, Corecivic, CXV, has a very bullish power gauge rating, and it's beginning to lead relative to the SPY. The stock is not yet overbought, and it has strong Chaikin money flow, and it's above the rising long-term trend line. So this is kind of a compelling name that, for exposure to the real estate group, as it's potentially bottoming on a relative basis. It's been moving sideways on an absolute basis since 2015. So, but we do like to see the names, as the market's consolidating. If there's a group that's holding up, we want to pay attention to that. So here you can see, here's our very bullish rating. Here's the market beginning to agree with our model as the stock begins to outperform relative to the SPY. We're rounding out of oversold conditions and moving towards overbought, but we're not quite at overbought conditions yet. You can see this strong spike higher, and this actually happened on Friday and continued yesterday. Keep in mind that Friday was the reconstitution of the Russell indexes, so the buying late in the day could be a function of the Russell reconstitution, but either way, there's money flowing into the stock, and the stock has kind of broken this downtrend line. It's now above the rising long-term trend line. This is the type of name. Do you want to chase it here? Maybe not, but if you get a pullback kind of to the $23 level, this is a compelling name on the long side. So as we look at the groups, there's really this interesting rotation taking place. Healthcare remains at the top, but as I said, utilities move into the number 2 slot with 10 bullish or very bullish stocks for 4 bearish or very bearish stocks. And down at the bottom, you can see some of the rotation that's taking place. Here's real estate. They're number 3 from the bottom. So, from a power bar perspective, not there yet, but on a relative basis, potentially bottoming. We looked at that. Here's your industrials and your materials, most exposed to a trade war, the bottom 2. energy, kind of a lot of volatility with the price of oil lately. So we'll keep an eye on that, and consumer staples are slowly moving up. So you can get powerful, profitable stock ideas and more every day. www.chaikinanalytics.com/PowerFeed TV. Have a great day, everyone.